Good afternoon, everyone. This is Brad Matheny. Today's the 22nd of August. Wanted to thank all of you for your comments on my last video. I think it was a couple days ago, and give you quite a bit of an update here with regards to this move that we've seen after Powell, and a little bit about how I would interpret what we have going on in this data. Now, obviously, I warned you guys before that we have this potential double topping pattern, and that I think that it could lead to something a little bit deeper, particularly with the unwinding of this phase. If we go way back here and take a look at a standard deviation channel, which I love using standard deviation channels, we'll go back down over here to 2015-16 lows, and we'll come across here to 2022 lows. And what this will do, pick any date, pick any time, and what this will do is this will tell us a range of price action depending on a linear regression standard deviation channel. Now, I like to look at twos because twos are the most common, in my opinion, normal channel. And what I will do is I'll come in here and I'll change the colors. Up color, we'll make it kind of a green color, and down color, so we got blue bases. Let's make it kind of a bluish color, and there we go. So now what this is telling you is outlier data getting outside of this channel, like right here. This is outlier range. This is unusual range. And now people build systems on this type of a range. What this means is when you get into this outlier data, outlier range, you could theoretically move into a buy mode. Here's another one down here. And what you would be doing in this mode is you would be essentially banking on a reversion back up here to potentially where the middle level is. So in this case, you'd be banking on a reversion up to here, banking on a reversion down to here, banking on a reversion up to about here. And in this case, you'd be banking on a reversion down to about here, or in this case, banking on a reversion down to about here. So understand that we're outside the range. What I'm just going to talk to you about here is that basic theory is we're outside of a normal price range. We've entered into a super speculative bubble. You know that this is a double topping formation. And you also know, if you follow my research, that we're using these zones as what is called the defense level, the Fibonacci defense level. So I like to use this 0.175 to 0.246 level as the defense zone. And of course, this 0.764 to 0.835 defense zone down here. Talked about that in last video. So those are the areas that I'm watching on this bigger, broader daily chart to indicate a potential breakdown in trend. Now, Powell came out with comments today, sending the market higher. I obviously was busy with, just call it a conference call, which is what it was. And if I were to come down here into this mode and take a look at what price is doing on a shorter term basis, I would have to really fall back into this range here, this lower range right here that I'm trying to highlight, into these lows right to there. And what we would be looking at here, guys, is this range using the same Fibonacci cycle. I think I have to come from here to here. Yep. And so here we go. We come in here, spread this out. And this is just traditional Fibonacci price theory, guys. It's not hard to do. Anybody can do this. And I, after years of doing this, kind of see this stuff. I've talked to you guys about it. But we have that defense zone right here. I'll make it red. And we have that defense zone right down here. So now, we had fallen below that level, ran to the 618 level. And again, I can redo this if you want me to redo it because I did it inverted. Let me see if I click here and go from here to here. So we ran to that 382 level, ran into support, bounced back up. We're still below this high. And I would suggest that if this was a reactionary move to the Fed's comments, we could look at a continued unwinding. Really, what I'm looking at here, what I'm watching for, is a breakdown of, this level here. And this level here. So I would suggest that if we get below this 639, call it 50 level, 639.50, then we could be looking at a pretty solid move back down into this lower level, which is 620, 623. So I'll get rid of this, figure out where we're at, 624.50. But as long as we stay above this level, which again is 641 to 639.50, then we should be in an uptrend. So understand that as long as we stay above this level upward, technically we are still in an uptrend. What has me a little concerned with regard to volume is here. Okay, we had this increasing volume here to the downside. We had this increasing volume here to the downside. And we never really had increasing volume up here. We actually had decreasing volume coming down. And I believe we're going to continue to see decreasing volume here. To me, that decreasing volume indicates this is kind of a failed move. So this is a non-momentum move. If we see this move higher, this could be a non-momentum move here, indicating that we're getting into kind of a breakdown, potential breakdown. So again, have we broken below the flagging pattern? Well, let's take a look. We come in here, we use our standard deviation channel again, pick the low level. Again, the nice thing about standard deviation is we can pick any level we want, a low, a high, whatever, and it'll map out the general trend with the 2x standard deviation variance of that trend. And you can see that we're still in that uptrend as of today. Okay, we've gotten a little below it down over here while we were basing and building consolidation, but we have stayed within that channel all the way up, and we have yet to break it. If I come in here and take a look, again, I'll change the colors so you can see down. And so we would have to get below this, again, 39.50 area. It basically consolidates right in this area, that we have to break below that level to indicate any type of breakdown. Those are my volume levels because I move things around. And again, that would mean that we would likely move down to this level. So what was also interesting about the Fed move today, okay, was the fact that it drove Bitcoin higher off of this low. This was our flag low. If you take a look here, we've got this excess phase peak pattern. We were very cleanly breaking down off of this move. Could have been a big breakdown today, I think. And again, I'm not 100% sure what Fed Powell talked about. So I was on a conference call this morning, but I would bet you that it sent the markets skyrocketing on some potential dovish news, I would guess. But again, we have this increasing volume going down, a big rotation. We have reverted. So take a look at this, guys. Okay, we come down to this low. Where did we revert to? That 382 level. Okay, that 382 level acts as an initial kind of a range. So we come from these lows up to here. Where did we revert to? 382. What happened once we cleanly broke the 382 level? We broke down to the 618. We broke down right to the defense level here. See the defense level? And where did we reject up here off of this high? Right into the defense level, right here. Now we have our new move here. We came up, we rejected right at the defense level here. Now you know why I'm calling these the defense level, because these levels play an important role. And what I'm seeing here on this move is you got the double bottom over here, complete rejection, moderately higher volume. I wouldn't call this a buy trend because we're still in a downtrend. We rejected at the high, roughly above the 382 level, which is this 382 level back over here. So we have this nice little range right in here that is likely going to be, actually, I'll do that as a box. Likely going to be a very critical price zone right in here, support and resistance. And headed into the weekend, we'll have to see if we get back above it or if we reject on Monday back to the downside. But this breakdown mode here sets up the potential of a very large, if we get it, a very large move back down to the downside, targeting the 95, 9600 area or 1000 area for Bitcoin. And how can I do this? I've explained it to you many times. Typically, the breakdown level is equal to the flag height. That's the flag height. If I drag the flag height back over here, hypothetically, anywhere in this area should move us down into the consolidation range here. And then potentially from the consolidation range down, moves us down to our ultimate low. Ultimate low in this area looks like it's 95, 96,000, and we'll see if it happens. Do we have any confirmation yet that it's happened? No. We were close before Fed Powell came out and chatted. We were going to potentially break down, move down into this area. Generalized downward trending was the case, but now we've got this reactionary move, and I call it a reactionary move simply because, I think had the Fed not come out and make comments today, I think we would have seen a moderately downward sideways kind of a day into the end of the week. Now, what happened to metals? Metals ripped. Silver ripped up to 39. Gold started to make a huge move. Didn't quite get above. This is a 4-hour chart. Didn't quite get above my level. I have a level here at 34.21. Got to get above that level to turn into bullish trending. Silver ripped above my level, 38.24, to really move into bullish trending. I think we're going to see how this plays out on Monday, Tuesday. I think this is a big expansion move in metals, but we shall see. The interesting thing here also would be to go to something like DDM, and you can see here, and I talked about this in the last video, you can see here that we're still in that broad expansion phase, that flagging phase. So what does this mean? What this means is that we have yet to really get above this level. So now, very simple. Draw the line, the Fibonacci level. So I can, like I said, let me see if I could do it visually. Where would the defense levels be? Roughly right in this area. And find my keyboard. And roughly right over here in this level. That looks about right. Now let's see. Come from this high down to this low. Oh, I'm a little high over here and almost perfect right here. There's the defense level. Okay, so we've gotten back above the defense level, which technically is bullish. We stay above this level here, we're bullish. Okay, we get below this level, we're looking at a breakdown potentially to between these two levels. That's what the defense levels are all about. This is kind of like the sweet spot here. Now, how did we stall over here? How did we stall right over here? It's these defense levels. Mathematically, these levels tend to be the most common levels. Now, when you come over here and you take a look at this range, if we come off of this low again, come up here to, well, let's go to this high, and look, our defense levels are still in this area and down here in this area. So what's happening is we're getting similar defense levels. The support and resistance levels are still playing out very similar, so we don't have to really stress about it. We know where price is going to find support, where it's going to find resistance. It's above this resistance area here, and if we were to move into any type of reversion, the reversion move would likely be down to about this level, meaning that if price were to correct or revert or reject and try to find support, it would be down to about this level. So now let's have some fun. Okay, we're technicians, we're trying to figure this out. This is DDM daily. We go all the way back 16, about as far back as I can go. We come over here to the standard regression channel. We pick our low, we pick our high, and looky there. Now, take a look at where these regression channels come into play. So here we go. We'll come in here, trying to get the price back to the front. And we take a look at this. We move down into the regression channel. Here's our middle level of the regression channel, right at the 382 level. We move down to the 50 level here. That's a little bit lower, and the 618's a little bit lower. So if we had a target, if we had to take a target based on this long-term regression channel, it would be basically right in this area. Would be right in that area for a downward reversion target. If we got any type of pullback or reversion, which happens in price quite often, it would essentially be, in my opinion, between this 50 level, which is this 50 level, and this 618 level, which is this 382 level, putting us kind of right in that area. So that means that if we do fail, we're looking at a potential 12% downside move at a minimum. And if we do rally, we are looking at a 2 to 3% upside move to get right up into this upper channel. So maybe 3%. So that's a 12% breakdown range and a 3.5%, 3.25% upside range. And this is how you pick apart charts based on ranges and data. Now, based on hypothetical Fibonacci price theory, which I like to use, we are currently in a bullish trend. We've broken above these highs. This is DDM. We've broken above these highs right here. We are in a bullish breakaway trend. In order for us to move away from this breakaway trend, we would have to get below this low right here. That is our current standout and unique low. It's actually a standout low, not unique. This is our unique low down here. So we could move into short-term bearish trending if we get below this level, 99.69, or we could get into intermediate term downward trending if we get below this level, 94.31. And like I said, that gives you an idea. If we break down and get below this level, this is short-term downward trending, likely to come down here. If we get below this level, then we are in intermediate term downward trending. And if that is the case, then we are likely going to try to move down into the support level, maybe lower down into this area. So we'll see how this plays out. But it's very interesting here when you look at this volume. Huge, big volume move on downward trending volume. Okay. If you know anything about this downward trending volume like this is not a good sign for this upward trend. Okay. You want to see upward trending continue to kind of build volume like this or like this. Okay. You want to see upward trending building on volume. Now, if we get continued follow through and it builds upward volume, that would be a good sign that this uptrend may continue. If we do get a reversion and we start to get red upward volume, then that means that this was a false move or reactionary move off the Fed, and we're likely going to come back and revert into this area. This becomes the defense zone. This is like the battle line right here. It's gotta move away from that in order to establish new territory, or it's going to revert back into this and battle it out. Okay, so you guys have asked a lot of questions. One of the questions was, how do I react to price trends? Let me just come over here and show you. So I have algos, and they're available. I'm not going to talk about it, but they're available. And this is the 5-minute algos. You can see long, everything is long. These react to price for me. All I got to do is watch these. Okay. The 10-minute algos or 15-minute algos. Long. So we got a few less of these because this is 15 minutes. It rolls. So these are midday, 22 bars, as of today, long, hitting targets. Come back over here, 60-minute algos, long. Every time you see pink here, we've hit targets. What we're looking for is thrusting to be above 30, typically. This is a proprietary indicator telling us we're moving very strongly to the upside. This is only 2 bars into it. And then, of course, we have the dailies as well. And, of course, you can see here GDX is long for 12 days, up 6.47%. GBTC short as of today at 3 o'clock, off 3.92. These shorts are going to be under a little pressure, but these are daily. Here's IBB long 2.7. Ether, wow, what a move. ETHA 60% in 28 days. All you got to do is follow them. Okay, Nugget, new trigger, already hit a first target. FBTC short off 4%. IXC. Now remember, the dailies swing longer than the 15-minute or the 60-minute or the 5-minute. So depending on how you want to trade these, like GDXJ, new trigger. Okay, that's a great new trigger. Already hit target 1. We've already seen some upward movement. What we're looking for here is some follow through. But now you would come down here to say the 5-minute. You would look for GDXJ, which should be down here. No new trigger, but above 30 on the thrusting. That's a pretty good upward trend. You could theoretically take the trade. You go down here to 2-minute if you want. See if we got any GDXJ. Nothing. So remember, and then 15-minute, I don't remember seeing GDXJ. Nope, flat right here. So the point again is that you can use these algos to help tell you what is moving. XOP has been in a long trade on the 15 minutes for 36 bars. up 3.25%. So here, nothing. ITA is the newest one, short. Let's go back here. That's 15-minute, 60-minute. So we have a new trigger here in PNQI, long trigger. We have a newest ones are going to be these twos or threes or ones. That's how many bars it's been in the trade. So as long as you get a three like this GDXJ, if this level was above 30, I'd say, yeah, it's a great trade. Okay, so here, FTN long with thrust at 49.88, I'd tell you that's a great trade. Okay, now with the profit factor and the win rate setting up like this 0.63 and 1.26, I'd tell you it's half allocation. So the closer you get to one or higher like this is, 100% or 80% allocation. This is 50% allocation. This is 100% allocation. That's a great number. This is 100% allocation. This is 50% allocation. Let me try to find you something that I would say would be, 60% or so. Probably be something along the lines of this. 69% profit or 0.69 profit factor and 1.54 win rate. To me, that's like a 60 or 70% allocation. And the only reason I'm saying it's higher is because of this win rate. If you get 60% and 97, this is more of a half allocation. 60 and 137, this would be more 60, 65% allocation. 43 to 94, like this, maybe 30, 40% allocation. And again, you use the thrusting pattern to see if you have that upward momentum. IBIT will come over here. IBIT. And let's take a look. This was 60 minutes, 1 hour. So you can see on the 60-minute here, IBIT, where was it? Right here. It's 4 bars into a long trade. It's already hit the first target. It's still at 57. It's basically a half allocation or a little less. And you can see where we're at here. That was 4 bars ago, got long back over here. Now, granted, the 5-minute got long earlier. The 60 minutes gets long later. But this is a long trade with an effective stop already set up right here. 65.83 above our entry price. So essentially, if we get 65.83, if we get below roughly that level, we're out of the trade. Very simple. So I try not to, I do take swing positions. One of the newest swing positions I took just yesterday is UNG. If you know anything about UNG, okay, I picked up a call option at $12 yesterday, 2 of them actually, for about 260 days out. So again, about a year out. Why am I looking at UNG right now? Why am I setting this up? Well, you tell me. Do you see any pattern here? Let's take a look at July, August. Oh, look what happened. Oh, July, August. Oh, look what happened. Oh. July, August. Went sideways, didn't really do much. July, August. Look what happened into the end of the year. July, August. Oh, look what happened into the end of the year. Oh, I don't know. Is this persistent? Does this happen all the time or nearly all the time? I don't know. What about this one? July, August. I don't know. Does it go up? I don't know. It went up a little here and came down. But look over here. Oh, look. It goes up. How much did it go up, Brad? Oh, I don't know. 50%? How about here? 10%, 11%? How about here? 60%? I don't know. How about here? 19%? How about here? Oops, 53%. Let me check this one. 26%. 68%. How about here? 84%. How about here? 67%. Now this is the outlier. I mean, really didn't do much. 21%. And then back over here from July to August up into these highs, 85%. Now what this is this is a seasonal play on demand for UNG, natural gas, based on the fact that maybe we have a severe winter in the Northeast. And if you want to take a look at seasonal predictions, Almanac, winter 2025, come right over here, take a look. Northeast. Winter will be warmer than normal, below average, day 1 of 2026. So this is not the right one. No, not now. Winter forecast. Snow, chill, repeat. Grab your warmest coat and boots. According to Farmer's Almanac, winter 2025 will shape up to be a wild ride. Get ready to chill, snow, repeat. Official forecast, see our fall forecast. That's fall for 2025. Coldest outbreaks. The season's coldest temperatures will be found in the northern plains to New England. That's the entire Northeast, all the way down to, Kansas, Tennessee, that area. Readers in the Northeast should also prepare for a cold winter, especially Idaho and Washington. When will it snow? Frequent snowstorms in the Northeast should keep people happy. So again, here's our 2005 to 26, 25 to 26 winter outlook. Chilly, wet, very cold, snowy, very cold, wet, very cold, snowy, average temps, and very snow filled. Okay, let's see how this plays out. If this plays out correct, the entire 2/3 of the United States and almost all of Canada is going to be, sub-zero at some point, which is why we're looking at this being a potential move to the upside, maybe up into this $40, $50 area, which would be a potential $100 to $200 move or percent move in UNG. Now, granted, you got time. Winter's not here yet, but you definitely want to try to take advantage of this longer term swing into, again, January, February, March of 2026. Okay. All right, guys, I'm going to leave it there. 33 minutes. Follow along, pay attention. Hope you like my research. And like I said, I'm glad to be posting some more videos and helping you guys out. Right now, like I said, we're bullish. We've got to watch that 639.50 area. That's our defense level moving down. And if we get below this 624.50, call it 620 roughly, then look out. We could be moving down. I'm not saying we are. I'm not telling you to short. I'm telling you that if we get down below this 620 level, then we could be moving dramatically downward. Okay, guys, talk to you later.